The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Mr. Valentine has set the price. Boys and girls, we are having a little bit of action tonight. I've posted the chart of the DAX. As you see, it has made some type of a bottom down here, completed a small ABCD pattern over the evening, and we're seeing pretty much the same thing when we look at the FTSE. The FTSE, of course, made that really nice butterfly pattern down here a few days ago that we were chatting about here, and we've had a pretty good rally. We rallied up to a 382 retracement. And this is a daily chart, so we're due for possibly a little bit of correction here because we're up 10 days, and usually the market does not go that much higher. If you go back and look at the time during February the 7th, you'll notice that we had a 10-day rally into that one before we came down into early March. And so we are due for a little bit of a correction. Now, we had some really exciting action last night in some of these indices. I'll put up the Dow Jones E-mini first because that's the one. This one happened at 2:45 in the morning Tucson time. And you'll notice here that we made the Gartley pattern on Friday. And then what we did last night is we went up exactly to the 61% retracement of the high on Friday. And that tells us pretty much where we're looking. Oh, we've got a caller from the San Francisco area. Daryl, what can I do for you?
Larry, good morning. Thank you very much for all of your work. So you were just, what you were just talking about is exactly what I want to ask you about. So you were talking about the pattern potentially Friday making a low. If we break 83, that's off the table. You just talked about the retracement. From here, I guess the question is, if you short them here for a move back down, or you buy them because you think that the low is in? I guess my question is, what level in the S&P do you think we have to go through on the upside to sort of confirm maybe where we've got some type of short-term bottom?
Well, one of the things that we had an idea of, I'll put up the chart that I posted on Friday, and I just wanted to show you that the rally that we should have gotten in the S&P, if it matched the Dow Jones and it matches the NASDAQ, should have taken us up to 26.27, and that was the exact high we made last night, just a little before 5 o'clock in the morning New York time. So it hit it exactly in the S&P, it hit it exactly in the Dow Jones, and it hit it exactly in the NASDAQ. Now, if we take a look at the NASDAQ, you're going to see that it did exactly the same thing. And all of these have come off, not a lot, but they've come off a little bit, 10 handles in the S&P, and we've come off about 40 handles in the NASDAQ and over 150 points in the Dow. So this tells us that the high we made overnight is extremely important. And if you look at the chart, Daryl, we're in a downtrend. If you go back to, March 27th when we had that, 61% retracement in the NASDAQ and also the S&P and the Dow, we've been down now for 2 weeks with lower highs and lower bottoms. And so the trend is still down. I still believe that nothing dramatic is going to happen until we take out the lows that we made on Friday. If we do that, that is very, very, and I hate to talk too much here, but I wanted to show you the pattern that I really focused on because everybody watches the Dow. Well, not everybody, but a lot of people do. If we look at this Dow Jones, you're going to see here that we came down and made a double bottom in early April. We had the nice 61% rally for 3 days, and we had the big sell-off on Friday. But, Daryl, if you look at that sell-off, you'll notice that that's a perfect 1-3-5 pattern. That's where you have higher bottoms. Each of those is a perfect ratio. 1 is 61%, 3 is 0.786%. We've had a really nice 61% rally tonight. So this shows you the importance of this, because breaking that breaking that low of Friday sets up a price level of 22,300 that has been our objective in the Dow, which equates to about I believe it's 2,420 in the S&P, as I recall. But this is where we stand. This is why it's such a critical day and a critical pattern that we had, finish on Friday, because we were down 700 points and it stopped exactly where it had to stop. I mean, to the exact tick. I mean, you can't ask for anything more technically perfect, in my opinion.
Great. Thank you very much.
That's all you need?
Yes, sir. That is it. That's the market that's moving so much right now. So I appreciate it.
Well, thank you very much. I appreciate you calling in, Daryl.
Take care, Larry.
You bet. Okay, that's basically what we're looking at on that. This is someone asked a question of my data provider. I have two. CQG, of course, is my primary one, Commodity Quote Graphics out of Denver, Colorado. They have perfect data, folks. They don't have bad ticks. It's very expensive, but it's certainly worth every penny. Anyway, that's neither here nor there. Someone asked me a question that I think is relatively important, and I want to bring this up just to give you an idea of some of these things that happen to this. Let me just show you something right here that you might find interesting. I found it interesting. This is the margin. Hold on just one second, get this up here. This is the margin requirements that we have at most of the CME members. You'll notice that the full margin on these is listed here. Then we also have day trade margins, which is 25% of normal. Now let's just take soybeans for an example. In other words, a regular contract, which sells for, let me see, around 50,000 bucks, and the margin on that is 1,430. But the day trade margin is only $357. That's 1/5 the amount of the normal, which is actually pretty good if you're, but I don't expect you to look at 2-minute charts or 5-minute charts. But if you looked at hourly charts and 30-minute charts, you can come up with some pretty good ideas for trades. Look at soybeans last night. This is the November soybean contract. I want to get it up here so you can take a look at it just to show you what's happening. Remember, this is in the midst of a supposed trade war, and you can notice the first trade war came out on April the 4th. Look what's happened. It's back to the highs again, folks. This market is saying, we don't care about a trade war. People are still going to eat soybeans, which we've been saying that, all along. The demand for soybeans is inelastic. But look at the perfect ABCD pattern there. I mean, this is an hourly chart going through nights and days, whatever you're looking at. But the hourly chart had a perfect ABCD pattern. If you look at it closely, you had 26 1-hour bars on the way up on the first AB leg, and on the CD leg, you had 26 1-hour bars. And it hasn't backed off very much, but that's 10 cents. That's $500. That's more than the value of your day trade margin. So that shows you that if you go down to a smaller time frame and limited yourself to just 2 or 3 or 4 trades a day, looking at hourly, half-hourly charts, you can trade with a very, very small amount to learn how to trade. Now later on, you certainly want to stick to your longer time frames, but this is one way to look at it. Pay attention to those margins. They're telling you something. We'll take a break here. We've got Tim Bost at our break today, 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, by the way, we're going to have Tim Boast of Financial Cycles Weekly on the show here from one of our most favorite places on this planet, down there in Manatee County, down in southern Florida, Sarasota and Longboat Key, and he'll be our guest. He's a very, very popular financial astrologer that I think you'll enjoy. Anyway, one of the things that we want to look at here is, since we were talking about the soybeans, is the seasonal chart that we have here going back, and this covers it since we started growing soybeans back in 1935. Basically, what we're looking at here is you'll notice that there's a really strong bias for the beans to be really positive through into the growing season, into July, and that's what we're looking at here. And this is so far, this is what's happened. Whether it's going to continue this way or not, I'm not really sure. Now, I've had a request to talk about a chart that I posted on Friday. Just one second here. I got the wrong venue here to pump. Just one second. I'll get it up here. There it is. This is what we were talking about on Friday, the importance of that line that we had there. Once we broke that trend line there at the 2635 level, it was important for two reasons. One is we were now below the opening price by quite a bit. And the second reason is that we were just ready to break the 1.618 expansion at that 2625 level. And of course, after we broke that, we came all the way down to the 2580, which was the 78% level, which was also that 135 pattern that we talked about. So, these are, things that happen, sometimes in the middle of the night, sometimes they happen during the day, but when they do happen, you certainly should try to at least keep an eye on those as you're looking at it. Now, I've had a request to take a look at the stock of General Electric. I haven't done anything with this stock since Hector was a pup, and Hector's pretty old right now. Let's bring this up and take a look at the last 4 years of General Electric. Remember, the high on this stock was way back about $90 a share. Back in 2006, when I believe that's when Jack Welch was retiring. And anyway, you'll notice here that during the 2016 and 2017 period, we made a beautiful head and shoulders pattern there, with the right shoulder being 78% of the high. and it was just pretty much spot on. Also, the high was designated by a butterfly pattern that you can see there from June of that year. But what's important here now? You see, this market has just had lower highs, lower lows for well over, well, let's see, it's been a year and a half now, and now we're coming down near the 1.618 expansion number that comes in at $11 a share. Below $10 a share, folks, they're going to be talking about some pretty serious things to save that company. It reminds me of what John Jameson from over in the UK told me once, and there's a story about the Tin Hats gentleman. That's a phrase from World War I, not World War II. I've got that in there wrong. It's World War I, 1919, and that's when the British commandos would be in a foxhole, and they were, going through nerve gas and machine guns and everything else, and they had to charge the enemy. And the quote was, "Tin hats, gentlemen," and that means that you had to put your tin hats on and go over the top of the foxhole and charge the enemy. And if you didn't, the commanding officer was to shoot you. And believe me, that happened more often than people want to talk about. But this is what's happening with General Electric. Below $10 a share, boys and girls, it's going to be tin hats, gentlemen. It's hard to believe this is the last original stock of the Dow Jones Industrial Average going back to, I believe, 1894. So that's not just a important thing. It's very important. People don't realize this, but during the 1929 to 1932 bear market, we lost over half of the Dow stocks. Of the 30 stocks, I think there were 16 of those stocks that filed bankruptcy. And American Telephone, one of our biggest things that we use every day, it filed bankruptcy twice, as I recall. The information that I get this from is from a little book called Only Yesterday, that was written in 1936 that described that era and what was going on. But in 1929, folks, there were over 2,000 automobile companies in the United States. 2,000. That's a lot of automobile companies. So remember that things change. They don't always remain the same. Now, I wanted to spend just a small time here because I was exposed to something that I didn't believe from my good friend Rich Anderson, and it was really quite amazing. And that was, he sent me an article showing me that it didn't show the charts. All it did was it showed that the some graphs of basically how the price of crude oil and the price of soybean oil had a very strong correlation. Folks, I said to myself, how could something that is inedible have a correlation with something that's edible? But I did this myself. I want you to put up DuPont in the Basil's telling us that DuPont was in the 1920s. Yeah, I think DuPont isn't that a Canadian company? As I recall, I don't know anything about stocks. I better shut my mouth and talk about oil, which is, I know a tiny bit about that. Anyway, notice that this is the monthly chart of the soybean oil monthly, and that blue line is the crude oil. There's a very strong correlation between crude oil and soybean oil. Why that is, I don't know. But it's really amazing. And if we take this to a little bit, smaller time frame and look at it on the weekly, you'll notice here that, we're seeing the same type of thing. Now, over the past 7 or 8 months, you'll notice that the price of crude oil has been rallying, but the price of soybean oil has come down. So that's during part of the time, when it's not correlating, but this has a relatively strong, very, very strong thing. So someone's telling us it's an American conglomerate. Thank you, David. He's telling us that DuPont is an American. I thought I just remember the name. Let's get something that I understand, but I don't understand that. So we want to move on to something else. We've got a really interesting time here in this gold market, folks. And I think we have to pay really close attention to it. One of the other things before we get to the gold, I want to talk just a tiny bit about the euro, because we're expecting the euro to be rallying a little bit today. And the reason for that is that we came down and hit a perfect 78% level 2 days in a row. That should get us to a rally up around the 123.40 level. We're above 123 now, so it's got a chance to make that 61% retracement. That might be a good place to take a short position on. Now, after we have another break coming up. Remember, after the break, we're going to have a new guest, also a Timer Digest winner. Tim Boast will be our guest. I've known Tim for quite some time, and I know he's going to be very entertaining. And anyway, we're going to be chatting with him a little bit when the break comes up. And then later this week, hopefully on Wednesday, I'm going to have our good friend Rich Anderson on to talk a little bit more about these tariffs that are going on. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Tim Boast of Financial Cycles Weekly. Are you on there, Tim, today?
Hi, Larry. How are you doing today?
I am really good. How's everything down there in Sarasota, Florida?
Well, we're warm and sunny as Florida should be. So.
Oh, that's we love that place down there,
I'm sure lots of
as you well know.
jealous.
Tim, congratulations on being in that Timer Digest. You know, that's no small feat. In fact, Steve Rhodes here at TFNN just won an award. He won the Timer of the Year in gold, which is really nice. But you've got a really good track record in the stock market this year, up 17% with the Dow down, over 3%. Can you give us a brief review of exactly what you do? We've never had you on before, and I know of your reputation in astrology, but most of the folks here at TFNN are not into astrology. Could you give us a little description of how you approach the market and what you do?
I'll do my best. Basically, one of the big concerns about using astrology in the markets is the word astrology, because it creates all kinds of misconceptions and myths and misunderstandings about what's really going on with it because of the popular use of the word, what sun sign are you, and does a Gemini get along with an Aquarius? So it's not that kind of astrology. Basically, what we're doing is looking at the planetary cycles, which are repeatable and predictable, and looking at the correlations between them and market movements. We've got historic market data that we examine in great detail. We look for significant events in the past, and then based on the recurrence of the planetary dynamics, we can then forecast the likelihood of recurring events. So it's lots of number crunching. And of course, we don't use the astrological work or the planetary analysis in a vacuum. We also combine it with technical analysis and an understanding of some fundamentals as well. For example, back during the dot-com bubble, we decided not to jump in with companies that had no earnings at all, and it saved our bacon in that case, just based on that fundamental consideration.
Mm-hmm. Well, you've got one chart here that I'd like to talk about today, because we've had an interest in Mercury retrograde course quite a bit, and this is the S&P 500. Do you want to tell the folks what that Mercury retrograde station means and how you use it?
Well, what we saw when Mercury went retrograde back on March 22nd, that actually occurred right after the market closed. So we got this big down day, and actually the S&P gapped lower and broke a short-term upward trend line there, and has never broken back above it since. Now, the Mercury retrograde phenomenon lasts about 3 weeks each time it occurs, and it's not a very rare thing. We get about 3 of these during the course of each year, so it's something that we've got lots of iterations on, and we can forecast pretty well with it. And when we see a strong market reaction like this with that Mercury retrograde station, it gives us some cues about what may be coming next. Now, this, of course, is what we would call maybe an optical illusion, because Mercury doesn't actually back up in the sky. It's seen from the Earth's perspective, and there are all kinds of celestial dynamics that cause that effect to happen. So we're seeing it from an Earth-centered standpoint. It appears to slow down and then move backwards in the sky for about 3 weeks. And then when this happens, we see some unusual effects here in the markets on Earth.
We have a question from one of our listeners that knows a little bit about astrology, and he mentions that is this Mercury phenomenon important because Mercury is the planet of communication?
Well, it does factor into the market activity pretty strongly because of that factor. I know we've done a lot of research on Mercury. In fact, a few years back, published a book called Mercury, Money, and the Markets. And in this, we did an in-depth analysis of markets around the world, and especially dealing with gold markets and the equities markets, and the impact on market activity. And certainly it has that symbolic connection. Mercury was the messenger of the gods, and it's associated with communications in general. But I think we have to be a little cautious about that, because what we're doing here is not looking at the symbolic implications of the planetary dynamics, but doing some pretty rigorous backtesting to see what's actually happened in the past with market phenomena vis-a-vis these various planetary alignments.
Wow, that's good. Well, the next one is going to be new to me because I have no idea who or what Volcanus is. So you're going to have to explain to me what that one is because I have. Is that Vedic astrology or what is that, Tim?
Actually, this is what we call a trans-Neptunian factor. It's part of the Uranian school of astrology. There was a fellow named Alfred Witte, a German scientist and an astrologer who was a very, very skilled engineer back around the time of World War I, who was studying various phenomena and postulated the existence of more planets outside the orbit of Pluto. And for many decades, he was considered to be basically a kook because nobody had ever seen this stuff. But then with some of our space telescopes, we discovered there's something called the Kuiper Belt, which is a bunch of objects out in space well beyond the orbit of Pluto. And some of these orbits coincide pretty closely with what Witte had postulated. So this is one of those bodies that was referred to as a hypothetical planet, but it's actually a Kuiper Belt object. And it, like other planets, will go through retrograde phases. And we've discovered some pretty strong correlations with some of these with market activity. The reason we mention this is because when we have Mercury ending its retrograde motion and returning to forward motion, that will happen on the 15th of April. This comes less than 24 hours after Volcanus does the same thing. And so when we get several of these piling up in a limited period of time, then it kind of emphasizes the need to look at that as a potential inflection point in the markets.
Wow, that's really interesting because whenever you mention a specific date, our ears perk up here at TFNN because we've seen some of these things work with, clock-like precision. Not all the time, of course, but high probability, of course. Now, I posted a chart in here when you're talking about Mercury direct stations in fire signs, and we go direct station on the 15th of April. So what would you be expecting? Just a major trend change at that time or continuation of the trend? How would you handle that?
Well, what we're looking at here is really a combination of these various factors and trying to interpret them together. The Volcanus station occurs on Saturday the 14th. Mercury goes direct on the 15th, which is Sunday. That's the same day as a new moon, which is the new moon in Aries on Sunday. And then 2 days after that, we have Saturn going into retrograde motion on the 17th. So there's a lot, it's a cluster effect that's going on there. Now, what we're looking at then, obviously, is a shift in trend occurring around the 16th or 17th based on this dynamic. Now, what we typically see with that Mercury direct station in fire signs is a period of some congested trading for a couple of weeks that then breaks out into a more aggressive uptrend. But when we factor in with that the impact of the new moon and the Saturn station as well, then it gives us a much clearer indication that we're looking for a trend reversal back to the upside around that time.
Good. We'll take a little break here. We'll be right back with Tim Bost of Financials Cycles Weekly, Sarasota, Florida.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. And Tim, I've got some questions for you. Tim Bose from Financial Cycles Weekly. Tim, do you use the Bradley model at all?
Yes, we refer to it many times, though that particular model inverts, and it's a little bit tricky to work with. Basically, what the Bradley model is a compilation of planetary dynamics developed by Donald Bradley back in the 1940s, I believe it was, that tries to forecast the markets. It's pretty good at nailing markets, but it's easy to get confused because the projection will often invert. And so we look at it from time to time, but don't base a lot of our forecasts on that.
Okay, that makes pretty good sense. Now, the second question someone's asked, and I don't know how to answer it, and that is, how would you describe yourself? What type of an astrologer are you? I know a good one. I know you're a good one, but but how? Actually, much better than good. What do you? How? I think what they're asking is, do you do Vedic astrology, or do you do? I don't even know how to answer the question. So you'll have to describe what you do. So.
Basically, I have a pretty diverse background. I have studied Vedic astrology, but I found that it's better not to mix the Western approach. So I use primarily the Western orientation, which is a tropical zodiac, and it doesn't coincide with the same zodiac timing that we find in Vedic astrology. But I would say that principally, even though I've been pretty classically educated in astrology and studied a lot of the medieval techniques during my training, that I tend to rely more on what I would call empirical scientific astrology. I'm interested in looking not so much at the symbolic dynamics that are there, although they can be very illuminating and important, as I am trying to determine the correlations with actual events based on planetary alignment. So I spend a lot of time doing computer research and projecting different models and tweaking things in harmonic analysis and cycle analysis, as well as conventional astrological techniques. So it's kind of a kitchen sink approach, you might say.
Well, it seems to be working pretty good. Now, someone's asked a question: is which program do you use for your astrological, analysis?
I use a variety of tools, Larry, in terms of actual astrological calculations. I rely pretty heavily on the Solar Fire software. I also use the Fibonacci Trader Galactic Trader software a great deal, as well as timing solutions. And some of Alfie Lavoie's programs as well, his market trader. They're a little long in the tooth now, but they proved to be very reliable in terms of setting up research models. So a variety of tools go into it.
Yeah, Alfie's program is quite popular. As you mentioned, it's not the cheapest thing. Well, it's far from cheap, but it certainly does the job. Now, the question that I have to ask myself that I want to ask you about here, on your trading style, Tim, do you do mostly, are you looking at, I'm sure you look at daily, but do you look at the much longer term perspective, or are you looking at trades that set up from 2 or 3 weeks, or what's your style of trading?
Basically, it's swing trading. Essentially, what we're doing is really trying to create a multi-layered approach. We do the longer-term market analysis to try to determine what the underlying trends are and identify major inflection points in advance. But we're much less interested in trying to be right with long-term forecasting than we are in trying to be able to trade effectively. So we're trading strictly U.S. equities. And doing an in-depth analysis of the individual equities based on their first trade horoscopes, as well as again, the technical analysis and the fundamental analysis that goes into that. And we're typically in a trade for an average of about 7 or 8 trading days. So it's
that's good.
That tends to be the average.
Well, that way you can control your risk really quite nice. Now, you mentioned that you're using the first day horoscopes. That is where the corporation was actually started on that particular day. Is that correct?
Well, actually,
That's like the birth chart of the...
Well, there is a corporate chart when the original corporation occurred, but what we found much more useful is based on the work of our friend Bill Meridian, who emphasizes the need to look at the first time that a stock was actually traded rather than the founding of the corporation itself. So we use first trade horoscopes. And in his book on planetary trading, he emphasizes that. And of course, he carries on the work from George Bayer, who was actually the first one to come up with that idea back in the 1940s.
Wow, that's really, yeah, we have Bill on once a month, and I can tell you this, if your April 15th, 16th date comes up, we'll have you on again. Tim, we're going to have you on again whether that date works or not.
Good, I appreciate
anyway,
that.
well, I've liked you for quite a while. Let's just take a quick look here at this next chart that I wanted to bring up here, and that is this chart where we're looking at this Mercury retro direct station coming in, and you have a price level down there of 25.25 in the S&P. Is that what you think we have a possibility of going there? Now, this is from the Galactic Trader, isn't it?
Right, yeah, this is the Galactic Trader Fibonacci Trader software, and what this program does is allow us to put planetary price lines on a chart. So we've got these wiggly lines on the chart here, and because of the fact that we were dealing here with an upcoming Volcanus station, as well as an upcoming Mercury station, what I did was project on the chart for the S&P the fourth harmonic price lines for Volcanus, which are the more or less horizontal green lines, and then the magenta, more curvy lines are the positions of Mercury. And that arrow points to the timing of this Mercury direct station that we have coming up in about a week from now. And that is that because that line is heavier, it's an indication this is a first harmonic Mercury line, indicating a primary position of Mercury in the sky. And that aligns exactly with this price point in the S&P at 25.25. So if the market goes down to 25.25 and then bounces back up, it's a high level of confirmation for support at that level. But that's what we're projecting anyway. Of course, we always pay attention to what the market actually does and try to trade that instead of trying to be right with our analysis, whether it uses astrology or not.
Oh, that's good. That's good advice in any market, that's for sure. Now, there's something that the folks might be interested in, and that is you're giving a free webinar pretty soon. Is that correct?
That's correct. We have that coming up. In fact, we'll be offering that a couple times this week. And if you go to bit.ly/ AT88WEB, and that AT and WEB are all caps. This is a case-sensitive URL.
Okay.
It will take you right to the registration page for that. I think we've got a slide for that as well.
Yes, we're watching that slide, and
Okay, great.
we've got to take another break here. But if you'll wait, I'd like to talk to you a little bit about the books that you've written, and
Surely.
maybe a tiny bit more about the webinar, because that when the music comes on, the break will come up. But I have one other question for one of our listeners, and that is, are you a big follower of the full moon and new moon phenomenon?
They're major movers of the markets. We pay attention to those very, very consistently.
Okay, we'll take a break here. We'll be right back with Tim Bose, Financial Cycles Weekly, Sarasota, Florida. We'll be right back, folks.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation, as ranked by Timers Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks. We're talking with our good friend Tim Bose of Sarasota, Florida. Tim, you want to tell us a little bit about the books that you have available?
Well, we've got a number of titles available. I mentioned earlier the book Mercury, Money, and the Markets, which is a pretty major research book with a kind of a long shelf life. It talks about our empirical data research with the markets based on Mercury phenomena. One of the things about them is that they reoccur fairly frequently, and so this has a lot of usefulness. I think we've got a slide there showing the surprising alliances, eclipse effects in markets and geopolitics. Typically, we try to publish a new book just prior to each solar eclipse. So we put out a couple of these in the course of each year, trying to detail the impacts of the eclipse on various markets. We're engaged with what we would call mundane astrology in that respect, looking at the impact on geopolitics and economic structures, because we believe that's very, very important to be well informed of in the background of the markets. Currently got a new title in preparation due to come out toward the middle of next month, Bitcoin Astrology. We're looking at the cryptocurrency markets and trying to determine the planetary correlations in terms of the cycles involved there. It's a very intriguing area to look at.
Wow. We have a question, Tim, from one of our listeners. Is Mr. Trump going, or President Trump going to be able to make it through the whole term here? Because many people think, what's your feeling on the geopolitical environment that we have going on now?
He's got amazing resiliency, doesn't he?
Yeah.
Well, it's very interesting because we've certainly seen a number of astrological impacts that suggest unfavorable outcomes for him. But in this particular case, I'm far more inclined to trust his own ability to shoot himself in the foot more than the astrology involved. So,
oh, that's good. Hey, Tim, that's a good point. Thanks for joining us. Tim Boast, Financial Cycles Weekly, and we'll have you on again, Tim, and thank you so much. We'll be watching that date of April the 16th. Tim Boast from Sarasota, Florida. We'll be see you tomorrow, folks. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.